Hassan, I'd like to welcome you on News in Focus this evening. And from a financial perspective, why has the reaction not been as negative as it was in the past?
Sure. Assalamu alaikum to you, and good evening also to all the listeners. Uh, Look, there's a couple of things. Firstly, remember when we had that a couple months back when he came out and he brought this fantastic presentation he did, and he had his like a chalkboard, like a placard, and then he was going around and showing each of the countries what the trade deficits were, and the like, and therefore this country must get this tariff. It was quite a like a shock and awe type of presentation where he tried to get the sort of the different countries or trading partners worried that he's going to implement it. And he obviously was testing the waters to some extent, but he did say he was going to implement it until there was also some pushback by major trading partners such as China. China was the big one. And China, he went in right up to 145% he was talking about, and then everything simmered back because China decided to also play a bit of hardball because they're big enough and they understood that they needed to be firm in terms of how they can do it. So he basically, since then, he sort of trekked back a bit and he eased off in terms of somewhat, and he had a 90-day pause. Now we've come to the effectively close to the 90-day pause, which is supposed to be 9th, but he's talking about now implementation of tariffs from the 1st of August. He has already to date concluded certain agreements with other countries. So countries like the UK, Vietnam. Now remember, Vietnam is a big exporter of textiles. So a lot of the clothes that we wear, many other things are manufactured in Vietnam. And for example, your iPhones and stuff like that, some of the stuff for components in there is also assembled and like in Vietnam and exported into the US. So they've already agreed in terms of a trade agreement outside of this year. So there is hope, or there's expectations by the market that between now till the 1st of August, potentially certain trade deals could still be done. And that's what the expectations or the hope is that, if, for example, South Africa, we're getting 30%. He's talked about Malaysia, Malaysia is, I think, 25%, Myanmar is 40%, and there's quite a few. There's a range of, but most of them are anywhere between 25, 30, 40%. That's the range that seems to be in terms of tariffs. South Africa is obviously 30%. So I think the expectations but not only South African markets, but global markets. You haven't seen global markets, the S&P, even the European markets, the UK markets, Asian markets haven't collapsed or faced significant downward pressure as what we had seen in the previous, because there's an expectation or thinking that there will be some level of agreement. So we are thinking that there's going to be higher tariffs, no doubt. So historically, for example, South Africa, we were effectively subjected to 2.5% by and large for most of the stuff. There's expectations that South Africa will be more level at about 15%. After some potential trade deal that's done, we'll probably end up around that. While it's higher than what we thought, it'll still be a lot lower than the 30%. So but as we get closer to the time and there's you could see a little bit more volatility in markets on the back of that. Now, how significant an impact will 30% be in terms of our current exports to the US? So to put into perspective, South Africa, of our total exports across the globe, 7% of our total exports goes to the US. What are our big exports? So of that 7%, half of it is minerals and metals. So platinum, gold, coal, those metals. Guess what? All those metals are not subjected to any tariffs. So that's a fantastic relief for us because half of what we export into the US is not subjected to tariffs. So fantastic. So there should be no impact on our mineral exports because the volumes should still remain relatively decent. And our customers in those countries in the US will continue to buy our product. So that's good, and we'll still earn our hard currency here. Now we come to the other half of what we're exporting. Two sectors in particular will be impacted. You highlighted earlier the automotive sector. That definitely will be impacted because currently a majority of our exports fall under the AGOA agreement, which is the Africa Growth sort of initiative. That is where we're exporting at effectively a 0% tariff. Now, to put a 30% tariff on cars now being exported to the US, it's obviously going to impact us. But guess what? It's not only impacting who are exporting to the US. Companies like Ford, an American company that's based here producing in South Africa, that's exporting back to the US. So not only is it impacting us in terms of our jobs and our economy, but it's also indirectly impacting an American company operating here. So I think sometimes, politicians and whatever don't think through things completely as well. So Trump is trying to say, well, if you don't want no tariffs, just come and take that plant that you got here in South Africa or Vietnam or whatever, set it up, close it there, set it up in the US. We'll have no tariffs for whatever you're producing for the US market. But the problem is to set up, to relocate it. Those things cost a huge amount of money and effort, and it doesn't happen overnight. The other sector, which is a potentially big impact, just on the automotive, the region in particular that will be impacted is your Eastern Cape. They obviously have big plants and the like there. So there is a potential for not only the car manufacturers per se, but the related industry around that. Now, whether you're producing a piston or a leather seat for the car or something like that, all industries around that's supplying to the automotives will be impacted. So there's potentially thousands of jobs, especially within that region, that could be impacted. The second sector that is potentially has a significant impact is our agricultural sector. Now remember, South Africa is one of the biggest exporters of citrus in the world, only second to Spain. Spain is the largest exporter of oranges and citrus products. South Africa is second in the world. And the US is one of our big export markets because the US is a huge country, 360 million people. They're big import. They love their orange juice and, they import a lot of citrus both from South Africa and Spain as well. Now, that is potentially impact. And to put it into perspective, regions that will be impacted, Western Cape. Think of citrus dal. Why it's called citrus dal? Citrus dal is a big producer of citrus products. Over the last 25 years, they've been producing significant amount for the export market, with the US being a major target market of them. That will have an impact. So towns could be impacted. But the great thing about fruit is it is a agile. If the producers are agile and they're nimble and they can move, you have some flexibility in terms of moving it to different markets. Can happen. So while the US is a big export market and you will be impacted, South Africa could look for alternatives. India. I mean, I'm dealing with a client of mine that's an exporter of that. And he's talking about recently India's importing substantial increase, is seeing demand of increase of our fruits into India or citrus products. He saw recently, even in fact, besides citrus, before the citrus season started, he was seeing things like apples being exported into India. So India, remember, over 1 billion people, big market, and that is a potential avenue.
And potentially is all the other BRICS countries.
And the other BRICS countries, China. Just think about it.
Even the Middle East now.
And the Middle East has historically already, I mean, you walk into, whether it's in Saudi Arabia or the UAE or Qatar, you walk into any of those big supermarkets, the chances of you seeing an orange from Cape to Cape Span orange or seeing a grape from our is a high probability of that. We've been now exporting to those countries for over 20 years. And they'll continue. But we got to put into perspective, the US is a big export market for our citrus. But as highlighted, I think India and China and those places could take some of that offtake. So yes, we will. There will be an impact.
And President Trump will be mindful of that, because
We'll
now
be
it will
mindful.
impact on what his people need in his
Correct.
country.
The other thing as well is that seasons. So effectively speaking, our exporters of fruit, especially citrus, do not compete with the American producers. So who are you trying to protect there? They're not. When the Americans are in their off season, that's when we're effectively exporting into their country to give them fruit. So that you could see pushback from the U.S. consumers, and they're like saying, or U.S. supermarket chains pushing back, and or your orange juice producers, and then pushing back to and saying, President Trump, you know what? We are facing massive shortages of oranges during our off seasons because you have implemented these tariffs. So you could get some pressure from the domestic supermarkets and domestic producers in the US onto it, and could result in a trade deal. So I think there is hope that a trade deal within the next 3 weeks potentially could happen. And you can see the president's office highlighted that they've noted the letter, they've gone through the contents, they don't agree with some of the points noted in that, but they are encouraged to say that not encouraged, they're optimistic to say that they want to reach some agreement, and they will continue to engage with their US counterparts and try and come to some level of agreement over the next couple of weeks. So I think there's some optimism within the markets that some agreement will be reached, and hopefully, inshallah, I think it will be beneficial for especially our country, but all countries globally, that there's some reasonable agreements that come into play with the US.
Well, in conclusion, the economist that was talking about this situation says the ANC will not concede on any of the issues that the US is expecting them to change. So, alternative markets is a possibility. And, even fruit, if you go to the UK, I mean, to buy an apple, it's compared to prices, it's probably 4 times as much.
Correct.
And I'm sure with these tariff increases, it's going to be the local users or local, consumers
will feel the pinch of that. Exactly.
So maybe he'll have to come to a compromise of sorts, knowing situation. But obviously, he's going to put pressure on South Africa.
Correct.
Particularly on the relationship there with BRICS. And BRICS now, the membership is increasing.
Correct. We are not the same world economy that we were 30 years ago. There's been a change, there's been an evolution that has taken place. You now have massive trading partners in the likes of China, in the likes of India, in the likes of Brazil, Turkey. There's major trading partners. And I think we need to be cognizant of that. While the US still remains the largest, globally, largest economy in the world, South Africa's trading partners, Europe is still one of our biggest trading partners, but slowly, I mean, if you look at China, we're exporting a massive amount of our minerals and metals into that country. And slowly but surely, we're exporting more and more other products, be it agricultural and the like, into that country as well. So I think it's a world that is changing, a global economy that is changing. And I think there's a realization by the US that they're no more the top dog that they were 30 years ago, the top superpower. They're trying to stamp their authority and through Trump, trying to do that. But there is now a little bit of pushback. Yes, there will be compromise everywhere. And you'll have to do that's politics, and that's the nature of also economic trade deals and the like. There will be some compromise. But I think what the US initially thinks they will get in terms of just being like a bully, and I think that's unlikely to happen. And I think we see more and more trade deals over the next couple of weeks being settled by the US and many other countries, which hopefully provides some ease in terms of the global markets. I think the one thing to highlight, which we've been talking about as well, we've had an ease in terms of geopolitics from a war perspective that we saw in the Middle East recently, either where we had the Iranian situation. Although Gaza is still under massive bombardment, and every day we're still hearing, number of martyrs within Gaza as well. But there is likely potentially he's looking to try and get a deal done within the next week or so as well. But again, the impact potentially on commodities such as oil, I think, is muted at this point in time, because now the likelihood of oil prices shooting up substantially, has the probability of that has lowered. So I think for us as consumers, while we saw a petrol price increase last week and that impacted our pockets, I think if where we see the rand at the moment at below 18 rands and where the current oil prices are, I think we could see potentially a cut in fuel price come the next month if the situation remains where it is currently.
I think, Hassan, an important point that, the rand is fairly stable at around 1780, 1790 range. The price of crude has not significantly jumped. The fact that, the ceasefires and the Middle East tensions are easing out, we're hoping that we'll have a decrease in petrol. There was a 20 odd cents or 40 odd cents increase. But going forward, it's quite promising. All we got to hope for, and maybe in conclusion, you need to comment, we're running out of time, that, there's all these political tensions that are taking place within South Africa, more so recently, this allegations by Mkonazi about the police force. Elections are coming up, the political elections within the ANC, and then municipal elections are coming up. So going forward, from a South African perspective, how do you foresee the financial setup? Do you think we'll have stability? There's nothing to be concerned about, or what is the sort of forecast going forward?
Sure. We have, barring what we've seen globally and the impact that has in terms of South Africa, and obviously this tariffs impact will have an impact, because not only will it will impact our some of our sectors which we highlighted, there is a related impact in terms of the treasury. So treasury's revenue collections from taxes from some of these sectors could potentially be impacted, and that means then our fiscal deficit could be a little bit higher, our budget deficit will be a little bit higher as well. However, there has been some improvement in terms of sentiment and the like within the South African economy. You have seen slowly some of the domestic sectors have had a relatively decent year over the past year. I'll give you examples, whether it's some of the local manufacturers, you've seen some of the local retailers and the like. They've had some decent results over the past 12, 18 months, and there is slowly some momentum around that there. However, it's still a touch and go. Politics always can play a part. The timing of what we saw of the announcement by General Mkonazi, and then the potential impact that has in terms of the major ruling party. Then secondly, you've got within the GNU themselves, the DA and South Africa having that argy-bargy because of the firing of the deputy minister from the DA as well. So that's still potentially an issue. So those issues playing out, and where if for example, the DA does decide to move out of the GNU, and within the ANC, that battles tend to sort of flare up, that potentially has an impact on our country. There's a lot of good things going for our country. We must not underestimate it as well. There is investment, there is coming through in certain areas. I mean, I saw an article today, we talked about Club Med. Club Med is talking about now, July 2026, next year's time, they're expecting to open up their resort on the North Coast in KZN. That's a fantastic world-class resort that's opening up in our doorstep. It potentially has a good impact in terms of bringing tourists into KZN and reviving and boosting our economy going forward as well. And you're seeing also other investments by local and foreign companies into our country. So there is some positive, but there are still some sort of dark clouds potentially on the politics front, especially within the GNU, but also within the largest party, the ANC as well. And global politics always plays a part. The major risk at the moment globally in the political front is obviously the tariffs. But I think there is some optimism that risk will sort of ease off in the coming weeks as well.